time for Under 30, talking IMAX here. George Tsilis with us, senior markets correspondent for the Schwab Network. And George, just all hype on Dune Part 2. It's not Dune 2, it's Dune Part 2. Dune Part 1, the remake in 2021. I've never even heard of these. Like, I just how far under the rock that I live, George. But certainly helping out IMAX here today, as in real time, the stock's up a healthy 3.25%.
Yeah. Thanks, Alex, because I haven't heard of it myself as well, so it's good to hear somebody else, again, doesn't understand all these movies and doesn't participate. But ideally speaking, for IMAX, they certainly want people to come to the theaters, especially considering their IMAX production and their proprietary large format theaters are actually very popular. And it's not just the theaters that they project their technologies in. You have to think about things like museums and aquatic centers. That's another element of their business, but also their proprietary 3D technical assistance technology for other things like concerts and so forth, which I find interesting. But nonetheless, I mean, you know, this movie Dune 2 actually had a pretty good opening, the best opening, I guess, for 2024 at 81.5 million. We're seeing a little bit of pickup in Warner Brothers, which again is the publisher of that movie, but at the same time, some of the theaters as well, like IMAX. But a couple things to note about IMAX that I found interesting is that obviously I can see that prices have been rising pretty significantly because, you know, they're generating gross profits 10% higher than where they were about 5 years ago. And that speaks to inflation, and gross profits are also right around where they were about 5 years ago. But the other thing is the company is still generating less revenue than it was going back to the pre-pandemic level. So I went back to 2019, and they were generating around 384 million in the last 12 months or 4 quarters, 366 million. But I did notice also that in the last 12 months they have been profitable, which on a sequential quarter-over-quarter basis for a full year, it's been a full year of profitability since the pandemic began. So I'm comparing these numbers of 2019. And that's actually promising, at least for a fundamental standpoint.
So, George, it's amazing to me because I know we're in a recent uptrend in IMAX shares, but so many of these really strong box office debuts haven't translated into growth for IMAX or even like AMC at all. So it's like, even though we have strong box office figures and headlines to be excited about, it's just like not enough to maintain upward momentum. And I know this is ironic because we are up today and we've been up recently, but over the long term, it hasn't seemed like it's enough for IMAX.
Well, I'm going to put AMC as a different category. I know it's a theater-based business, but there's just so much balance sheet stress in that name that you just continue to see just, you know, exponential dilution in that name. So I don't think AMC is really reflective of the theater business per se. I think it's reflective of just bad financing, and to be honest with you. So in terms of IMAX, I mean, obviously the stock is down over the last 5 years. It's certainly not down like AMC. It's down about 28%. But if you look at its earnings, it actually declined about 30%. So it actually reflects really strong fundamentals, again, on the upside, but also the downside. And I did notice, like I said, you know, this is the first 4 quarters, sequentially speaking, that they've generated positive net income since 2019. Now, I'm not saying it's going to continue from here, but at the very least, what it does is it provides support for institutional investors that are looking for profitable companies. So this is a profitable company. They are expected to earn about 95 cents this year in 2024 on an adjusted basis. It puts its earnings growth or its multiple at around 17 times. But if you look at the earnings growth for the year, it's around 21% compared to last. So, you know, one would say it's trading at less than 1 times EBITDA growth. Maybe that's considered, you know, fair value. But you also have to compare the industry group and the health of the industry space as well. In a nutshell, it looks cheap, but you got to consider the industry group. And lastly, I'll say this: you know, balance sheets certainly matter. The company is well positioned. It's got, you know, market cap and equity and preferreds about 860 million, 250 million in debt, and they have about 93 million in cash. So the last thing I'll point out is they have been buying back shares in lieu of paying a dividend. So that tells me that they feel comfortable in the number of showings that they have or theaters that they have, and they're repatriating some cash back to shareholders in the form of share buyback.
George, kind of final thought here as we sort of zoom out and think about the overall market's recent willingness to rotate out of some of the outperformers and broaden out this rally. One would have to think a company like IMAX that has turned the corner a little bit fundamentally. You talked about some of those valuation metrics. There might actually be appetite for a company like this now as some of these technical trends have sort of started to turn a little bit in some of the momentum names.
Yeah. Oh, yeah. I mean, yeah, definitely. You're seeing that across the board. You know, the NVIDIAs and AMDs and Taiwan Semiconductors and Broadcoms, they've all been falling in the last few days. So there's some good, healthy rotation. Obviously, I think IMAX is partaking in that to some degree. But then again, you got to think about the nature of, you know, the returns on equity versus the cost of equity. And one would say this is not a growth name. This is essentially a story where the stock itself hasn't performed all that poorly, considering it was in the center of the COVID pandemic where they just completely shut down and they lost all their revenue. So overall, it's a profitable company. But ideally speaking, if you're looking for profit growth, there's certainly a lot of better companies out there.
Yeah, and a good point, George. And I will say, I saw Dune 2 for both of you losers that have not seen it. It was phenomenal, but I'm also fairly invested in the Dune franchise, so I understand why it might not be your thing. But we will leave it there. Great breakdown as always, George Tsilis.